All right, testing 1, 2, 3. Good morning. FX Street, are you alive? FX Street. Cool. Yeah. What they say, blah, blah, yeah, blah, 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 blah. So good to see you. Good morning, everybody. Who's glad to be alive? Happy non-farm payrolls, 1,352,651. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Good morning. Hi, my name is Wayne. I'm a currency trader just like you. Got a little more experience maybe. This is my, almost 14 years of doing this webinar, and I've been working with FX Street for about 15 years doing webinars, and before webinars, doing chats and presentations and PowerPoints and all that kind of stuff. Let's see. What qualifies for me being here besides that? I've done a few things. I've been on a couple of TV shows. I've been featured in a few newspapers and magazines, and I have an education. Cool. So that's really cool. So, with all that in mind, I'm here. The raison d'etre of why I'm here is I want to share my experience with you and share my knowledge with you. The overriding goal of helping you learn how to put together trade plans, both technically and fundamentally, so that you can feel confident as a trader. And I'm very rarely ever interested in what's happening now. I want you to think about that. I never ever log into a chart and say, I wonder what's going on, let's get going, I wonder what's going to happen. What's happening now, what's happening in the New York session was planned yesterday. You have to understand that. I work through my own charts, and I work with, whatever. And I go through and I do my analysis. My analysis that I'm doing is not like, I wonder what I should do in the next 20 minutes. Thursdays, I dedicate to planning out Friday, Monday, and Tuesday. And then Fridays, I'm planning out Monday and Tuesday, and maybe Wednesday. And then by Monday, I'm already thinking Thursday, Friday. That's where I want you to be someday. Now, I'm assuming most people here are relatively new, and therefore I'm assuming you spend most of your time on the 1 hour chart, 15-minute chart, 5-minute chart kind of thing, which is perfectly fine. But that makes you purely tactical. I just want to help you improve your tactics. Okay? I mean, you're really good at shooting a rifle and kicking down doors and driving Humvees around, but I also want to teach you the other side of strategy. How to win the war, so to speak, right? Otherwise the tactics get lost and don't produce the results that you were expecting. So we're going to work on that. So that's both long-term fundamentals and long-term technical. So we'll work on all of that and also answer your questions and so on and so forth. So welcome to Non-Farm Payrolls. Number, 167? It's not bad, hey? By the way, I'm with tradersway.com, a boutique foreign exchange trading firm that would like to earn your loyalty and respect. So, if you learned something new today, if you like the webinar today, if you just found today entertaining over the next 3 hours of you and I spending time together, would you please pay it back and visit tradersway.com? Simple enough, right? Open up a demo account. Honestly, take you less than 30 seconds. You fill out the form, boom, you're in the back office. Once you're in the back office, you can download MT4, place a few trades. You'll be able to see the fast execution speed, you'll be able to see the low spreads, and you'll be able to see the giant swaps. And then one day, when you're ready to trade real money and they've earned your loyalty and respect, perhaps you'll choose them for your live trading account. Simple enough, right? Cool. Right on. So good to have you here. Thank you to FX Street for our wonderful relationship over the last 15 or 16 years. And also thank you to our moderator, who is the world's greatest moderator. Okay? World's greatest moderator. So thank you, moderator. Oh, let's see if I can get the chat up on the thingamabobber. What is this? Is that? That's that. Let me open that up. And then I got to grab this. Double click that. Copy that. And then I go to here. And I paste that. And then I click yup. And maybe we'll get chat in the live stream. Good eye, mate. There it is. Cool. Cool. All right. Yeah, thank you, moderator. Very nice. All right. Cool. Very nice. Very nice. Good to see you. So we have, here's the agenda today. It's 7:38. At 8:30, Non-Farm Payrolls comes out. Then something will happen, right? Then something will happen. Very interesting. There'll be some volatility in the market. We'll check it out. We'll see how support and resistance holds or not holds. We can look at that, do some technical analysis. Right? And then what? Well, here's the interesting thing. So non-farm payrolls comes out $1.65 or something, right? What is on the mind of the market right now, guys? What is in control of market sentiment? Is it inflation? Is it productivity? Is it employment? Are economists breaking down the factors of production and looking at capital, labor, and entrepreneurialism, or is there something else going on in the minds of the trading world right now? And if so, if there's something unusual going on in the minds of market participants, what is on their mind? The virus. So Baby G makes a brilliant point. The point I'm trying to make. Baby G is absolutely 1,000% correct. We're right, and so is Lucas, in the sense that the virus is on the mind of the market, and this NFP is really backward looking before the virus hit the United States of America. And of course, that's what non-farm payrolls is. It's not that the citizens of China are not a consequence to the global economy. No. We're measuring non-farm payrolls. The employment situation report in the United States, the household survey and the establishment survey that measures employment in the United States. So none of that is going to have the virus involved in the data. So Sandlot says 200K. Okay, $1.65. How about that? How about $1.65 instead? 165. But the thing is, that's not what's on our mind right now. Now, how about this? In 2 months, the data will have the virus. And what if we do see people being laid off from Wayfair, people being furloughed at the port of Long Beach, people at American Airlines told not to come into work, or they're going to do one less puddle jump this week than normal. How about conferences being canceled and caterers losing contracts? Like, when do we start seeing that? In a month or two. So that's where we're kind of on our way. Okay. Okay. So we're not quite there yet. So I propose we kind of look at things a little bit differently this month. And instead of just trading the headline news, I propose we kind of look at where we've come from and where we're gone and where we're going, and try to establish some sort of level of normality in the market, look at some larger support and resistance areas, and kind of plan out the rest of March maybe. Try to look at what's happening and have the market provide some answers. Because we've seen some interesting price action over the last 3 weeks, wouldn't you agree? Do you guys remember maybe 3 or 4 weeks ago, it was a Wednesday, and Japanese yen just fell off the face of a cliff, just like all at once. Yen got super weak, but quote unquote, it wasn't supposed to. Does anyone remember that? That's interesting, John. I'm not sure what you mean by that, but I don't disagree with the timing, but anyways. Nobody remembers the yen. I'm also trying to figure out how laggy the lag is. Okay, we got a couple of yeses, so there's a bit of a lag. Okay, and then the Fed did their emergency cut, and typically in a scenario like that, the dollar actually strengthens, but the dollar weakened. So we can look at that and try to figure out like what's happening. Because the question isn't really what, it's why. Why is it happening? Sometimes that's impossible to figure out, like why did someone sell and why did someone buy? It could just be panic, right? But nonetheless, we can at least identify the what and then try to explain what phenomenon would create US dollar weakness. Okay? So we can do all of that together over the next 3 hours. Okay? Couple of rules, really, not many, but if you're here to heckle, please disappear. Do everyone a favor. If you're here to spam, hey guys, if you want to make 1,000 pips in 2 hours, you should come to my channel on YouTube. You should also disappear. What else? Treat your fellow traders, your trading brothers and sisters here in the chat room, please treat them with dignity and respect. Okay, so there's the ground rules. Okay. All right, and I will do my best today. To answer your questions. I do want you to understand that when someone asks a question, I often give detailed answers, like 10-minute answers, because I'm not interested in just telling you what I think, but why I think, or what is happening. More, I'd like to focus on more like why it's happening. So often I give these detailed answers. So you'll ask a question because I look at the chat for a second and I see someone ask a good question. Then I'll look at my charts and I'll start talking for 10 minutes, which means for 10 minutes I have not been watching the chat. So please don't get all pissy if I don't answer your question. Some people do. I've asked that question 4 times and he's ignoring me. Dude, I'm doing my best is all I'm trying to tell you, okay? I'm doing my best. Cool. Alrighty then. So non-farm payrolls. Yes, it is a big deal. Faux show. It is a sort of a report card for the health of the U.S. economy. Faux show. It is backward looking just enough that it's not nearly as relevant as it usually is, but it will be important. So let me pull up FX Street. FXStreet.com. I think FX Street should buy Yahoo. What do you think? All right. Ba 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 ba. I'm a little laggy. I wonder if it's Google or YouTube. Hang on. Ba 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 ba. Yeah, it's a little slow. Guess streaming's really sucking it down. Yeah, we'll definitely go through oil today, Ricky. Faux show. Yeah, I'm laggy. Hopefully the stream's all right. I guess maybe the stream setting is set on 4K or something. That's cool. All right. Here we are. Beautiful FXStreet.com. Non-farm payrolls. Trade balance. I like big negative numbers, by the way. Now, balance of trade has obviously been affected by the trade war and now the virus, so we need to get to some level of normality. But in a normal market, I love to see a big negative number. Okay? The bigger negative number, the better. Minus 50? Heck, give me minus 75 billion, right? What that would tell you is Americans are buying more from foreigners than foreigners are buying from Americans, and that would weaken the US dollar. What that translates to, if you want to read behind the numbers, that means Americans are filthy, stinking rich. So the more negative, the more positive I read it. Okay. So you'll have to look at the historic data to see, where are we now relative to where we were or relative to what is normal. Okay. And you'll see back in, come on now. What? There it is. Even back in 2000 let's go back to 2008 when things were bad. You see how we went from negative 63 to negative 27? That's good, right? Less trade deficit. I mean, you must read in the media where they say, oh, the deficit's too big. We need less deficit. Well, here's the 2008 crash and we got less deficit. Do you think the average American was feeling pretty good about themselves in the middle of 2009? Anyone want to answer? How is the average American feeling in June 2009? Horrible. Horrible. But why? Everyone, the media, fake news, the media got what they wanted. a much improved balance of trade. Look at that. There was a tiny deficit, less than half of what it used to be. But why? Well, Americans were broke. Americans didn't have a job. Americans had no money. Americans were poor. And then 2010, 2011, 2012, 2013, 14, 15, 16, and then even boom, deficits increasing all the way back. Not all the way back to 63, but all the way to 53, and even a little bit lower, it looks like, somewhere in here, if I can grab it. Not quite. 59. There we go, 59.9. Almost exactly back to where we were. Now think about the economic activity and the certainty. Do you remember we had this giant rally for a year or two? And then we had this rally in the stock market, but nobody liked it. Do you remember the sentiment in the time there? Like the market's going up and everyone felt uneasy. Like, oh, there's going to be a pullback. There's going to be a pullback. This is going to drop at any time. You guys remember that in this period here? People felt very uneasy about the rally, but there was a rally. Oops, I didn't mean to actually zoom in there. Okay? And then what? How do I reset this? Hello? There we go. Okay? And then all of a sudden, by 2017, everyone felt good about making money. Okay? And in that time, the trade balance got worse and worse and worse. Why? Because people became more and more wealthy. Okay? So anyways, heading up is not so good, right? Hey, Sandlot, I'm really glad that you're enthusiastic in the chat. But can you give some other people a chance to voice their questions and thoughts? Okay? So thank you, but chill out, man. Relax. All right. So anyways, there's a thought, right? It's sort of counterintuitive. The way I look at it, the bigger the debt, the better we are. It's not really debt. It's just we import more than we export. That's all it is. Why do we import more? Because Americans are rich, and you can just get foreigners to make you stuff like beach chairs or barbecues or whatever, and they'll make them cheaper than you can make here. So you buy it from a foreigner. Cool. Thank you, Sandlot. So there's one thought, right? So that's coming up today too. Very interesting. But again, overshadowed, right? Are COT dates, COT reports helpful? Yes, they are. I look at COT maybe once a month. And it helps you identify, maybe a little late, but identify extreme market conditions, like tops and bottoms. But it'll also explain like why the euro dollar is going up. It doesn't just tell you euro dollar is going up, but it'll tell you, are people buying the euro or are they selling the dollar? And it'll help you understand the mechanics behind the rally so that you can try to use that information to predict the near future. For example, if euro dollar's going up but nobody is buying the euro, then what do we know? People are selling the dollar. More likely is they're getting out of euro dollar shorts. Okay? They've identified a bottom in the euro dollar or something, okay? You understand that? So now, if that's the case, then you can put another plan thinking like one day at good resistance, those bears, those euro dollar bears, will probably come back and do what they did last time. Because if you made a ton of money selling euro dollar last month, and then all those bears took profit, In a week or two, once there's a little bit of a reprise to that drop, there's a pullback, there's a lower high, and we're back to an obvious resistance, those bears will probably come back and want to make a whole bunch of money doing the exact same thing they did last month. Okay? And a COT data will help you analyze that situation. Okay? Now, if euro dollar's going up because everyone's buying euro, don't get ready to sell the next sell, because that's not what's happening. Okay? So COT data, fantastic for an analyst. Okay? And there you go. Okay, so anyways, NFP, trade balance, cool. And then this is all part of NFP, average hours, average weekly, labor force participation rate, average hours, all this kind of stuff, blah, blah, blah. The unemployment rate, great, 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 great. Ooh, so we got kitty cat today as well. Okay, and then we got some speeches, but it's at the end of the day. All right, cool. So lots of news today, but it's all the same thing. Only the names will change. All right, and then, hey, we got IVPMI today. Well, that's interesting. Baker Hughes is kind of interesting, especially with oil down. We'll see what's happening there. OPEC is cutting like crazy. Well, are we taking some rigs offline? That'll be interesting. Okay, and then here's your COT data coming out at the end of the day. Okay, and this COT data is data from Tuesday of this week. Okay. Yeah, so Baby G, I don't know if there was a conversation about it, but I see Baby G's comment. And one of the things we could look at today is the Fed funds futures market, and we could look at the pricing of the money markets. We can look at that and see how much they're expected to cut. Even though they already cut 50 basis points, are they going to cut again in the March meeting? And then what about, I think there's another one late April, and then I think there's another one mid-June. And then the summer ones typically don't matter, and then the next one is basically SEP and DECE. SEP late October and DECE December. So we can look at all of those, okay? Open interest is how many contracts are open. So Max, if I bought 3 weeks ago and I still haven't closed my trades, that's an open interest. It's not a new trade. It's an existing trade. Well, Baby G, if they've decided to go to zero, then let's get to zero. Is probably what they're thinking. Whatever. Okay? So at the end of the day, that's what matters. If everyone thinks they're going to zero, then it's already being priced in, so you might as well just go to zero. But okay. Anyways, so we'll do all that. Wayne, COT data is Friday, last data released on Tuesday. Yes. Today's COT data by the CFTC, the Commodities Futures Trading Commission, these were reported on Tuesday. So think of this. Large institutional investors are required to reveal their positions to the government. If they ask them to do it Monday, then people get all bitchy, right? They come to work, they're like, oh, I got to do all this government work, right? And there's other things going on Mondays. Like Mondays are just busy. And people are cranky. They don't want to do CFTC stuff. They want to make money. They want to talk to their clients. So they don't want to do it on a Monday. So CFTC is smart. They say, all right. End of day Tuesday, you report to us your open positions. And they're like, oh, okay, fine. So by the end of the day on Tuesday, large institutional investors submit their open positions, or open interest, if you will, to the CFTC. That's all compiled, put into the Commitment of Traders report, which is released Friday afternoon. Okay? Does that make sense? Does that help? Crypto says, can the Fed go negative, though? They can do whatever they want. Okay? All right. My kids and I were driving around town last night, like 10 o'clock at night, on a school night. It's all right, my kids are geniuses. And we got like the house music rocking. Oops, didn't mean to do that. Got the house music rocking at full. So it's funny. All right. Fed watch tool. Boom. 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 If you have FOMO, you should get FOMIC. Holy snickerschnocker. It's amazing. So we're basically sitting at $1.25. 40% chance on the 18th that it drops to 0.75. Ho, 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 ho. And a 60% chance we drop all the way to 50. Whoa, ho, ho, ho. Well, they're all speculators. Commercials. So, Max, you got hedgers or you have speculators. There's only two. So now you're saying commercials and the other group? Well, commercials are professional, per se. They're really, actually, a commercial. Let me take it back, because now I know what you're saying. You're looking at slightly different data than I use, but I know what you're saying here. A commercial uses the underlying asset. So if you're talking about wheat, a commercial buys the wheat to turn the wheat into cereal. Okay? But the funny thing is most of them are hedgers. So they'll enter the market not to buy wheat, like they buy wheat for September, but they want to pay today's price. They're not. You're right, but typically those guys would be more worried about prices going up between now, right? And so they're hedgers. So, but the general definition of what a commercial is they're the ones that actually use the product. They intend to take delivery. They're going to turn copper into pipe. They're going to turn gold into dental fillings. Okay? They're going to buy soybean meal and turn it into cattle feed. That kind of stuff. Okay. So anyways, March 18th, we're pricing in more cuts. Wowzer. Now, here's the thing. This is based on real money. This is not based on sentiment. This is not based on opinion. This is based on real negotiations between, real professionals and with very, very large sums of money. So this is happening, but it is based on emotions and other judgments. So there can be a tendency to be wrong in the heat of the moment, and you'll see that by these numbers changing. So right now, there's a 40% chance interest rates will be zero by April. End of April, basically May 1st. Okay. There's a 45% chance will be between 25 and 50 versus 0 and 25 basis points. Okay. And very little chance will be way up here. Right? But look, we're at basically 1 to 1 1/4. There's like only a 10% chance we'll be at half of what we are now. So here's the thing. Over the next few weeks, or even the next several days, maybe every day you take a look at this. Don't worry about the March one. Look at the April one and see if this 9% goes back up and gets higher and these come back down. Another way of looking at it is maybe we calm down. Max says, would commercials have an inside edge? No. Professional traders are stupid, weak, lazy, ignorant, as Michael Jackson would say, just ignorant traders just like we are. There's nothing special about these people at all. They don't have angel wings. They don't fly around. They don't have inside information. In fact, most of them are pretty poor traders. So I think you could whoop their butt. Okay? Wasn't that cigar I smoked last night? Anyways. All right, so that'd be that. So that's my recommendation for you. Watch this, just particularly this one. Watch it and see if it goes up. And if so, these other things are coming down. And the way to read into that is we're calming down. Okay, we're calming down. Okay. And now June's typically the real medians are June and D's. And June, okay, is about the same. So they're saying we're going to slash by then. Okay. So I don't know. I think they will go again in March, but not by as much as the market said. And then they'll go again in April, but not by as much as the market said. And then June's the real meeting. But here's the thing too. I think, and I'm not a doctor yet. I'm not a pathologist. I'm not a epidemiologist. But if this virus is anything like the flu virus, by the time we hit June, it'll die off naturally. People in the southern hemisphere will be screwed. So if you live in Argentina or Australia, you might want to buy some masks. Okay. By the way, hand sanitizer is worth its weight in gold now, right? I don't know what it's actually. You just can't find hand sanitizer in American grocery stores. So if you're in the southern hemisphere, if you're in South Africa, if you're in Australia, get hand sanitizer. Buy it now. If that's your thing, buy it now. Because when you hit winter, you're going to be exposed to this virus. But I'm interested in if this just all of a sudden totally quiets down naturally because flu season's over. I don't know. Right? I don't know. But it'd be interesting. And if so, I don't think the Fed will feel the need to slash interest rates to zero if suddenly, the whole thing kind of blows over. Now, that also gives us a year to find a vaccine. Okay? Oh, Brendan's like, it's already sold out in Argentina? Sweet. Maybe the government bought it all and is going to sell it to you. It's already rare in Indonesia. Oh, no. All right, well, you guys are prepared. So anyway, like I said, I don't know nothing, but I know how, right? I don't know much, but I know I love you. Don't know much. All right, so we'll watch the little ones. These are easy to pay attention to. Okay? And we're probably overdoing it right now. La 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 la. Cool. We'll never run out of vodka, though. Isn't that funny? So wash your hands with vodka, but you're like, we'll run out of hand sanitizer, we'll run out of fresh water, but we'll never run out of vodka. I've been to 10 liquor stores today and I can't find any vodka. You're like, that ain't ever going to be a problem, right? So wash your hands with vodka. La 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 la. All right. Let's do some text. Actually, you know what? Let's get out of this. Oh, my camera's in the way. My camera's in the way. The cows must take. Hang on, I gotta get my drawing tool now. No. Oh, I gotta move that out. Move that over there. Is that all right? No. Oh, that's still slightly in the way. All right. We'll have to do with that. No, I'm not suggesting that. I'm just saying that nobody really cares. So it comes out, let's say, 152. What does that mean to the market? Nothing. Okay? Okay? Because it's not pricing in the thing that matters. You always have to ask yourself, what matters right now? Non-farm payrolls? Why? We're at full employment in February. Cool. We already knew that. Well, what if 10,000 jobs are added, or what if 10,000 jobs are lost? Like, nobody cares. This is not what's important right now. Now, next month, we're going to take a look and see how the virus affected the American economy. How bad was it? And is it likely to get worse? Well, that's what we care about. You see what I mean? HK Trader, European investors took their money back. See, European investors were invested in America to collect high interest because they got negative interest in their jurisdiction. Well, they're losing all of that, so they're like, get out. That's it. The reason to be here has diminished, so they're like, yeah, if you're not going to pay us for the money, then just give it back. So European investors took their money back. That's it. It's not too complicated. All right, so let's go to like a 4 hour, and I want to keep looking at various sell zones, and you see there's a little bit of an overlap here. So the way to read this chart that I have set up here is the general move will look like this. Okay. Now inside of that, we have price action. Down, 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 up, sell, 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 and so on and so forth. Ricky, I just explained that basically the number today is meaningless, so it shouldn't change anything. It's meaningless. Okay? It's not the concern of the market. You know, one of the things to look at, and the Fed is certainly looking at this, is PCE, but most traders don't follow PCE, they don't understand it. So instead they use CPI. So let's talk about CPI. What does CPI measure? Inflation. Cool. What variable in the economy has a major impact on inflation? Anyone want to take a guess? Oh, is that right, Jim? Holy schnecker. Okay. Oh, wait. The lag. By the way, moderator, I often set my YouTube settings so that it's ultra low latency, and it'll cut the lag but more than in half. You'll have like a 5-second lag and not a 30-second lag. And it doesn't kill the resolution too bad. You can still get 1080p. And most people don't have 4K screens anyways. In fact, I bet you if you look, half the people still have 720. So just a thought. Oil, guys, the answer is oil. What variable has a major impact on inflation is oil. So let me ask you, let's go back to the inflation. Is your local central bank trying to create inflation, or are they trying to lower inflation? Sure, moderator. I don't think you can change it now, but when you start the YouTube setting, it says normal, low latency, or ultra low, and it helps tremendously. YouTube wasn't really meant for live. And they've kind of twisted and tweaked it over the years to do live, but anyways, right? They're trying to raise inflation, okay, by spurring economic activity. And to do that, the catalyst to spur economic activity is to make money very available, aka liquid, and cheap to borrow, aka low interest rates. But oil has dropped 25% in a month, and that kills inflation. The food you eat is fertilized, and that fertilizer isn't from cow manure. It's from it's from cracking crude oil. So you can pull out things like nat gas and nitrogen and all that kind of stuff. So the food you eat was created with the help of crude oil. The clothes you wear have crude oil in it. The chair you're sitting on has crude oil in it. Your lights are on, somehow crude oil is always involved with that. Every time you order something, your organic free-range chicken breasts from Amazon Fresh, well, it gets put on a truck. But wait, it went from a truck was involved getting the chicken to the slaughterhouse, then a truck was involved getting the chicken breast to the packing plant, and then you get the packing plant to Amazon Fresh distribution center, and then it had to get on an airplane, and then it got on another truck and went to the distribution center for Amazon near you, and then it went on another truck, and they drove it to your house and dropped it off so that you can have your organic free-range chicken. And it probably came from Ecuador. Well, actually, so my kids and I, we were at the country club the other day, and we were talking about why certain vegetables tasted good or bad. I think it was onions. I'm like, well, Georgia has fantastic onions. They have Vidalia onions. But for some reason, all the other onions taste bad in Georgia. I don't know what it is. Like the red onions, they're pungent and stuff. And then I'm like, what? They probably come from Ecuador. And then you have to fly them all the way over to Georgia instead of just going 50 miles away and getting the best onions in the world. So that's the kind of world we live in. Your organic free-range chicken is from Kazakhstan, but you buy it in your local grocery store. But anyways, so oil impacts everything. Okay, it powers your house, right? It was involved in making your iPhone. It's in everything. The food you eat, everything. So when oil falls, that lowers inflation, and that is very difficult for central banks because right now they're trying to create inflation. Okay. Anyways, typically in a scenario like what we're in, right, you have risk on and risk off. And typically when you see a move like what we're looking at, this is a risk off scenario, okay? But until the Fed cut, this was pretty straightforward. Now the Fed is cutting and expecting to cut more. So in the short run, the dollar's weak, but on the medium run, the dollar should strengthen, and then on the longer run, the dollar should weaken again. And by longer, I mean much longer. End of the year, maybe. So you have to decide how you're playing this, and then, of course, you may have lost the typical risk-off congruency or correlation or whatever you want to call it that we have been enjoying since the beginning of the year. Okay, so this right here we are is a big question mark. What I would like to see under normal market conditions would be for a continuation down, and that would be the continuation of the risk-off theme. Okay, so the dialogue that we've been trading since January 1st is risk-off. And typically this year I do this time of year, like if you go back 1 year to the day, to the non-farm payrolls, March 2019, you'd probably hear me talk about things like Japanese repatriation flows and stuff like that. But I'm not sure if that's what's moving the market right now. In fact, I doubt it. Okay. Cool, right? So let's get off of this. Boo 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 doo. Boo doo 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 doo. Let's do. Do you guys want to do gold, oil, and Bitcoin before NFP comes out? Oh, we only got 8 minutes. So we'll start with oil. Oh, I guess that's Bitcoin. Well, let's get off Bitcoin. I want to do oil first. All right. So, we lost it. So a couple of days ago, well, actually on the beginning of the week, let's go all the way back to Monday. And I thought there was one more up here. Okay. On Monday, we were down here and I discussed, by the way, if you visit tradersway.com, open up a demo account. In the back office, there's a button to my daily webinars. This week I've been spending like 2 or 3 hours a day with people. And those webinars are free if you're a client. So visit tradersway.com. But one of the things we were talking about on Monday is for oil to rise so we could sell it. And one of the things we're doing, now I'm a little messed up here because I adjusted to show the opposite point of view, but not for several days after. So I can't even delete this, but I think this was up here and all this. But what we had done at some point, okay, I said, look, we had this big run down. So if you were going to be a bear in the new week, okay, the week we're completing now, so you got to go back last Friday, 1 week ago. I'm talking about this week. So we're here, and I said, well, first of all, this is an exit zone for bears that shorted last week. So this is an out. That's the assumption. And then the next assumption is, if you're a bear, you will want to sell again. So the basis of that was, at what price would you sell again? And we went through and we did some technical analysis, and I looked at psych levels, and we had one here, one here, one here, one here, one here, and another one here, right? And I said, well, what you want to do now your strategy is already set. You want to sell again. Now you got to use technical analysis to confirm the prices in which you would consider selling if you got some sort of pattern. And what kind of pattern would you look for? Okay? Things like a lower high, lower low scenario in which you would sell the new lower high, right? So it went almost till Thursday, but you can see we had an up, a down, an up, a down, an up, right? Well, double top, I should grab that. 100% retracement. So this was like Tuesday or Wednesday. So on this, when we were here, I did a lesson on the powerful meaning of this move. You know what I mean? I actually said this is a big aha, a big red flag. Like this is shields up, red alert if you're a bull, but we were all bears because this is a bearish trade plan. Get ready, right? That this was a huge clue. And of course, so then you had Wednesday, and then finally Thursday, and then finally down. But this was our trade plan 1 week ago. The whole idea was that this was going to roll over and fall for quite some time, in fact, if we can get lower than this low, right? If you can create now a big macro lower low, it's, I forget what it is, it's like 36 or something. It's a big deal below us. All right, so non-farm payrolls is going to come out. So if you got the number, please post the number. I will pull up the calendar. And remember, watch your kitty cat too. Let me get off this. Oh, wrong one. La 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 la. By the way, thank you for being here today. I appreciate it. I've been doing like this webinar almost 14 years, so I see a ton of familiar faces that have been around for practically the entire 14 years. So that's really cool. And some of you literally. Neves. Oh, Wally. I like the original name for Nevis. So I was saying $1.65. And what was the other one? $1.62, but we'll see. Tradersway.com. Is that right, UK Kenny? Seems more like more than that to me. Thank you, Jean-Guy. Two minutes. 2 minutes. Oh, here we go. Circle, 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 spinning, spinning, spinning. Here we go, guys. Get ready, because this ain't funny. Come on now. 273. Ho, 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 ho. Too bad it doesn't mean anything. Oh, man, what a waste of non-farm payrolls. Holy smokes. Anyways, good. Good. Got a red hot, ripper hot number that would scream to the Fed, whatever you do, don't cut interest rates. But they already cut interest rates, and they're going to cut interest rates more. Therefore, it's basically meaningless. So we threw away a hot NFP for nothing. Look, dude, it's amazing because If you're at full employment and you're adding almost 300,000 jobs a month to the economy, you'd be jacking up interest rates like crazy to avoid inflation. But I guess I can talk about it now while we work this out. Let me switch this to a bullish template before we go on. There we go. All right. I believe the Fed cut interest rates to allow other central banks around the world to cut their interest rate. Okay? And if the Fed didn't cut interest rates and everyone else did cut interest rates, what would happen is we'd have a massive carry trade on the dollar. The dollar would get ripper strong, but I told you that we don't want the dollar to be ripper strong. And then in that case, what would happen is imports would flourish, exports would die, but more importantly, inflation would collapse. So you watch, inflation in Europe is going to collapse in the next 2 months. So what is Christine Lagarde going to do about that? But it's insane for the Fed to be cutting. You know, the last time the Fed cut between meetings was the day Lehman Brothers collapsed. Like, we're not there yet, bro. Right? We're not there yet, but that's what our Fed is doing right now. So anyway, so it's not the end of the world, but they are freaking out. And at the end of the day, it doesn't do anything for the virus. Why is that? So it's really insane that we have 3.6% unemployment and we're adding 273,000 jobs to an already full employment economy. And then we're cutting interest rates. Like, it doesn't make sense. It's amazing. But the Fed, at least now, is acting. It's never really acted this way before. So Powell's new to this. And remember, Powell's not an economist. He's a businessman. So the Fed is acting like they are the central bank for the entire world. And that's that. So that would be the plan for Monday, by the way. Between now and Monday, that's probably what we want to look at. Well, baby G, I wouldn't say people were panicking because of it, because it was already priced in. We already knew they were going to do it. Okay? We had discussed that there would be an emergency meeting on Wednesday. And what I was expecting, Wednesday, what I was expecting was a coordinated cut by the Fed, by the Bank of Canada. Australia had already gone, so maybe New Zealand. But Aussie went on Monday. I'd already cut. Okay. And the ECB, see, the problem is I don't know what the ECB was going to do because they're already zero, right? And Swissy, but I don't know what the Swiss National Bank would do. They're already at zero. But there'd be some sort of coordinated response is what I was expecting on Wednesday. And then the Fed cut on Tuesday after the finance minister meeting. Okay, some of the central banks and finance ministers got together, and it looked like Fed cut first so that they could allow the others to cut. Okay? Because there are negative consequences for the other countries cutting as well. So they said, look, we can't act Jay Powell. Because I'm sure they all got on the phone, finance ministers, central bankers, they get on the phone like, okay, how are we going to respond to this market risk? And everyone says, okay, we need to cut, at least just symbolically, at least cut. And all the other countries are like, yeah, that's good, but we can't. And Powell's like, well, what do you mean you can't? Well, if we cut and you're way up there, you know, it screws things up. It would hurt. We can't, Jay Powell. Fed, we can't. So we're not going to do nothing unless you cut first, I think is what went down at that meeting. So an hour after the meeting, an hour after hanging up the phone, the Fed cut. Cool. And then what happened? Wednesday, CAD cut, so on and so forth. So now we're getting that thing. But the Fed didn't need to cut. It didn't do a dang thing for the United States of America. It didn't do anything. Okay? Now, the part I find interesting is we're looking at a 10-year note paying 0.73. That's unbelievable. In fact, much of my adult life, I thought that was impossible. It was unthinkable. Like it just, if it was double that, it would be unthinkable. 1.5 is unthinkable. I actually did a presentation many, many years ago about Newtonian physics and how Newtonian physics helps explain why the 10-year T-note can never go below 2%. No matter how bad things got. It just was physically, using the laws of nature, physically impossible for the 10-year T-note to go below 2%. What? So here we are. Like, I wasn't even thinking 1.5. Like, 1.5, I'm like, no, that's impossible. We can't breach 2. 1.5, that's dumb. 1? What do you, but 0.73, like, that doesn't work, but here we are. Okay? So what do we know? How do you get a 10-year T-note to pay 0.73? Well, there has to be a ginormous bull run. Ginormous. A week ago, I used, or 2 weeks ago, I used an analogy. It's a dangerous one, but of a tsunami. Of just this torrent of water, this giant current that is unstoppable. Well, that's what it looks like right now, people flooding into the treasury market in the United States. But the dollar is weak. What does that explain? That should explain something to us. What can we read behind that? There's a ginormous move into treasuries. Biblical flood into treasuries. Okay? But the dollar is weak. Well, it tells us that the people buying, or the institutions buying 10-year T-notes in 2 years, okay, 10s and 2s and 5s, the people that are buying are not foreigners. If they were foreigners with money in foreign countries, I mean, it could be foreigners, but let me explain like more technically, okay? If they were foreigners, so if you were an institution like the Bank of Indonesia, I'll just randomly pick one, and you wanted to buy some 10-year T-notes, you would have to convert your local currency into US dollars first. So you need to buy dollars. Okay? And with your dollars, you buy treasuries. Okay? So that would drive up the value of the USD. This is the supply of dollars. Quantity. Price. Okay? 1, 2, 3, 4, 5, 6, whatever you want, trillion. And we'll do 1, 2, 3, 4, 5, 6. I'm trying to show you quantity goes up to the right, quantity goes up vertically. Okay, there's supply. And then there's the demand for dollars. Okay? And you, by the way, you can actually make this quite complicated. But if, okay, so here's the normal price then. So now we got to do equilibrium. Okay? So the supply of US dollars in the interbanking system was 3.5 whatever trillion, let's say. And the price was, turns out, about 3.5 whatever. Purchasing power parity of 3.5. Okay, so what we're talking about, either demand goes up or supply goes down. It just depends on how you draw it. So we'll do this as a supply side. So Indonesians come into the market and they buy up quantities of US dollars. Okay. You know what? I just realized I totally have this backwards. Wow, that's like kindergarten mistake. I'm looking at this like this doesn't make sense. Oh, snap. Amazing. I made a kindergarten mistake. Sorry. Obviously, this would be downward sloping. Sorry, my bad. I'm like, huh? What? Whoa. Anyways, sorry. All right, there we go. So the supply, so the Indonesians come up, they buy up a whole bunch of dollars. So there now is less dollars in the interbanking system available to meet demand. So this means we need to move the supply from 3.5, let's say, to 2.5. Okay? So we would go 2.5, up, okay? Up. Now, the thing is, we didn't move up or down the supply curve. We actually shifted the supply curve. So this will be parallel. And we'll label this, because I always label my charts properly, S2. So supply shifted, okay, from this quantity to that quantity, from 3.5 to 2.5. And now we have a new price. An equilibrium price of 4.5. Okay. So if foreigners, let's say if rich Indonesians or the Bank of Indonesia came to the interbanking system, they wanted to buy dollars so that they can then convert the dollars into treasuries, then the supply globally of dollars would be diminished and the value of each dollar would go up. In this case, from 3.5 to 4.5. Okay, quantity shifts down, less quantity, higher prices. And what we've seen is there are a lot of people, an amazing amount, maybe the most ever in the history of the United States of America, people buying treasuries, and the dollar is weak. So we can extrapolate this information and say, well, if it was foreigners, then they are, well, it's not foreigners, because if it was foreigners, the dollar would go up because the supply of dollars globally would fall, but that hasn't happened. So one of the other things is it could be foreigners that were already in the US market and they've simply moved out of Apple stock and into the 10-year T-note. HK Trader says, why did they first choose 10-year rather than 2? Well, actually everything. It's the whole yield curve. Okay? So a yield curve typically looks like this. Okay? This is your yield curve, for example. And what you'd have over here is rate and time. So you have like a 1 year, a 2 year, a 5 year, a 10 year, 15 year, and a 30 year. Okay? And typically, people call this duration. Duration has more to do with volatility than time. So we'll call this time. The more time you're invested into this asset, the more risk you face, because there's a multitude of variables that would diminish the value of this investment over time. So if you're only in it for 3 months, the world's not likely to change that much in 3 months. If you're in this for 30 years, yeah, the world will change over 30 years. Well, will it change for you or against you? Well, you don't know. So you're going to have to be compensated for that extra risk. So typically, as you move down, right, they call this the front end or the back end of the yield curve. Typically, as you move through time, you should be compensated more and more just to meet that risk. And of course, things like time value of money and inflation and all these other things that impact the amount of risk you're taking for this. And right now, what we're seeing is people are buying everything. And the other problem is the yield curve looks like this, right? Or even, I don't think I even drew that quite right. It's almost this way, right? So it's inverted, it's flat, it's gobbledygoo. Okay? If you pick up a textbook on economics or monetary policy or whatever, they're going to show you a lot of the things I just drew for you, but they won't show you this. Like, this is what it was, this is what it is now, and this is what it means. Like, it's just never happened before. Okay? Your grandpa, your dad, they never saw this. Even if they were economists or traders or whatever, this just didn't exist. So, it's complicated. So, what I've been doing is buying Swiss francs. I've been selling Aussie. Where's Aussie? I've been selling Kiwi. We did a few CAD. Euro's just, I was not ready for the Euro. So I missed that, but I'm okay with missing. Missing is better than losing. And I've been buying Japanese yen. And then all year, in fact, I've been watching dollar, and sometimes I buy it and sometimes I sell it. But by and large, I've been staying away from it. And it has to do with the level of reaction by the Fed to markets. See, I'm an economist, right? I am a trained economist, okay? I learned macroeconomics from an actual senior economist at the Fed. He'd work at the Fed all day, and then at night he'd teach me how to do macroeconomics. Thank you, Harvard. So I am a trained economist, and when the central bank is reacting to the market, wait, the market's not the economy, right? So it gets all gobbledygook, and what the Fed does affects the dollar and all kinds of things. So I'm usually like hardcore dollar, right? I'm either hardcore for it or I'm hardcore against it, but I'm super clear. The last 6 months to 12 months, I'm like, I'm not so sure about this dollar. Maybe, right? And then this Euro blindsided just since that Fed move. I'm like, whoa. Okay. But I've been very clear. I've been destroying the Aussie. CAD's been great as oil's been dropping. Kiwi is the same as Aussie. Their balance of trade data has been pathetic for years, right? And I've been buying Swiss franc and yen like a crazy. So there's my opinion. There's where I stand on things. Pound is pound. It'll get way oversold, and then it'll recover and get overbought. So right now they're in negotiations with Europe. So this one I tend not to get to. It's not that you can't trade it, but these other things are working so well that this is sort of like leftovers. Okay. Any thoughts or questions on that? I basically just shared everything with you. That's everything I know and everything I've been doing. So we can take a look at some of these setups if you want. We can start by looking at Aussie. Okay. Boom, 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 boom. So my goal on Aussie is I am going to stay short until we hit basically 67. So we're at 70 now. I have 300 more pips I'd like to make on this. Okay. So right now I just have a basic little swing trade. I did a little front run in the last week of February. We call this a front run. So it's a March front run. And I'm considering this a monthly M3 swing. Okay. And my target is monthly M1. Okay. So that's my plan. So let me map this out a little bit more for you. It's only just started. So the plan was down, 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 down. Up, up, and down, 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 down. Cool. Okay. And I just have a pissy little trade here. I'm at break even. I could lock in maybe, what is this? I'm at 72. We're at 69. So I have 210 pips on this. But I'm not ready to move it beyond break even. I'm not ready to lock in profit yet, because it's a pissy little trade. 200 pips isn't enough. All right. Cool. But it's a beginning. Okay? It's a beginning. If it fails to breach today or Monday, then I will probably lock in some pips. But most likely in the next 48 hours of trading, we're going to get a retest of probably 70, like 70 and a half, and then we'll bring it downtown. And when we get down here, then I'll probably lock in 150 pips or something. Okay? So hopefully that makes sense. But I believe it's too early to move. I want to give it as much room as possible because I want to survive this move. TBM, I see what you're saying. I'll deal with it there. So TBM is asking, like, why not drop it to 66? I might. But let's deal with that when we get there. Okay? So I'm also trading a very large audience of people that may not be familiar with me or my techniques, even though I've been doing this webinar for 14 years at FX Street. There could be a lot of new people here, and I'm giving the basics. Like, if you don't understand this, you don't get it at all. So I got to give the basics. But you're completely right. In this scenario, you could probably drop it down there. Okay? But you're at a more advanced level, TBM. But thank you for catching it. You're completely correct. Oh, right on, though. Good call. I mean, seriously, good call. Cool. So that's that. Dollar, I don't want to trade, or at least not in these conditions. So let me show you how I would trade this. I'm a bull on dollar, not Aussie, on dollar, on US dollar. But I'm completely aware that it's bearish. So the meaningfulness of that to me is don't sell it now. Someday, whether it's today, tomorrow, next week, 2 weeks from now, next month, middle of summer, at some point the US dollar will get its time to shine. And I will see it in price action like this. And when I see it, then I will fire for effect. But right now, I look at this and I go, nah, no, not going to sell it. Now, a bull, oh my gosh, a bull should probably be crushing this. So a bull would change the template and look at it from a bullish point of view and buy the green zones. So a bull on this would be a buyer right now, in fact. And by Monday, we'll be at 67. Okay? And you'd be buying it at 66. So that would be my day trading plan. Oh, I should mention that. I have a swing trading group. We meet live once a week, every Thursday, to plan trades for Monday and Tuesday. Let me say that again. We meet every Thursday at the London close to plan Monday and Tuesday's trades 2 days in advance. So it's very, very technically and very, very fundamentally based planning. And we typically meet for 2 or 3 hours. 2 hours, let's say. Next week, I will be reviewing other people's trade plans. We'll be going over their charts live in front of the group, and I can pepper questions and they can give responses and develop confidence and refine their skills. Awesome, right? The link to that website is swing.fxbootcamp.com. It does require money, but less money than textbooks to one of my Harvard classes. So it's not a lot of money, but it does require money. But it is live, okay? Now, I can't have you in a live trading room if you don't know how to swing trade. Otherwise, you're asking me dumb questions, and I'm like, dude, we're up here and you're down there. It's not your fault. So when you join, you get the entire swing trading video course because you have to have it. Now, 2.5 weeks ago, I spent 3 days with the swing trading group teaching them how to day trade like what you're looking at here. If you join the swing trading group, you get the day trading course for free. It's just in your members area. So you get the swing trading video course and the day trading video course. And then there's like 5 bonuses you get there, like the chart templates, the tools, the EAs, the framework. All this stuff gets all crammed in there. So it's all that one price. So if you want to join and get those 2 video training courses and the live coaching, swing.fxbootcamp.com. So to learn how to do this, join the group, man. Okay? That should be you should know this, that you're a buyer at 66, and by the end of Monday, you'll be at 67. And probably by the time you log in to start trading on Monday, you'll already be at 67 with 100 pips in your pocket, and you'll be closing your trades, not opening trades. Brad says, I'm already up 500 pips just from yesterday's swing trading session. Oh, good job, Brad. Fist bump. That's how you do it, guys. Get on it. Okay, get on it. So another one I showed you is I'm buying Swiss franc because these are all risk off scenarios. Okay, so anytime I'm in a risk off scenario, I'm buying Swiss franc. So right now I have 2 stop losses. Can you guys see them here? 2 stop losses. They're swing trades. My entries are right here. Here's my first short. Here's my second short. Okay. So my first short is at 65.50. Oops. It's hard to use, all right. And the second short is at 65. And we are at 59.5. So these trades are now up more than 500 pips each. Okay. So we can move this one That's 420, 430, 4. If I moved it here, it'd be 450 locked in. Worst case scenario. Why didn't that move? Okay. And the other one is, that's 500 pips right there. Oh, it's not moving today. What's going on, dude? Cool. But I'm not going to move it yet. It's too early. Okay, I just want to show you that, okay, and those are just swing trades. Jim made 285 pips yesterday on the yen and Swissy. Boom, right on. Okay, those are just swing trades. I've been in them since the beginning of the year. What does that mean? Like, don't get caught up on the pips. What does it mean? First of all, I had a plan in advance. I took that down, baby G. Okay. So let's focus on what it meant. I had a trade plan in advance. There were both fundamental and technical reasons for them. Okay. And one of the universal truths, this is something that we focus on in the group often, the universal truths of trading. What do we know? Forget about your technique or what indicator and stuff, but what are the universal truths of being a profitable trader? One of them is you must let your winners run. And so I'm trying to give many examples to the community of letting the winners run. Many people in this chat right now find it difficult to hold a trade for a whole day. And a week seems incomprehensible. But a month? Well, how about 2 months of holding a trade? Well, I got to get you there. Okay? This trade I've been in since May 9th. That's 10 months I've been in that trade. Once again, it's not the idea that it's a perfect trade or it's a beautiful trade or look, this is, look how good I am. What I'm trying to show you, what I'm trying to show you is that if you understand one of the universal truths of success in trading is letting your winners run, I'm trying to give you examples of letting your winners run. Walter, I'm not sure what you're talking about, but why don't you email me, wayne@fxbootcamp.com. Okay. Yeah, well, you got to let winners run, right, Mr. High Volt, not losers. Let your winners run. Okay, let your winners run. So those are just examples. Okay, so I would like to sell this pair is another example. So you always have to do things like go on higher time frames and identify levels of support and resistance. There's nothing unique about time frames. You still have to do your analysis, right? And I'm going to like mark areas of interest or opportunities, AOs. And that's what these things are, but on smaller time frames, right? So if I were me, I would be looking for something like this in the near future. A down, 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 an up, up. This used to be support. So in the future, I'm going to look to it as being a level of resistance, which is the definition of a trend. And the lower high would create a lower low. Or the Fibonacci retracement would create a Fibonacci extension. Or the wave would do whatever waves do, okay? But it doesn't matter. It's the same idea. Using different tools, you can predict the same thing. At the end of the day, price action, or let's say a trend, is a downtrend specifically, is defined by lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, until it double bottoms, right? So I look at this as down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, down. Oh. Okay, consolidation, breakout, down, 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 up, sell, down, 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 down. Okay, so plausible sells are lower highs. Not plausible sells, not plausible sells, not plausible sells, plausible sell. So that's what I would be looking for if I were me in the next 24 hours of trading. Yeah, the IVPMI could be interesting, but IVPMI isn't till 10, is it? No, I guess they do it at 9:30. All right, cool. So in about 30 minutes. Now, wait, no. What's the other? Hang on, I got to turn my drawing tool off. I'm looking at the FX Street calendar. Oh yeah, it is IVPMI, but it's at 10, guys. You're an hour, you're half an hour off. It's 1 hour from now. Okay, unless you're talking about the old stuff, yeah, then that's already up. So we could take a look at that. Balance of trade. I wonder how they break this out. Exports in general are a little low, but let me take a look at this. I wonder if they break it apart. What I'm looking at is commodity exports. And I'm not sure if this includes commodity exports. The International Merchandise Trade released by Statistics Canada is the difference in value of its imports and exports of Canadian goods, excluding tangible things like service. Okay, good. Export data can give important. Good. All right, so this is a bad number. Okay, this is bad for Canada. Less nickel, less gold, less oil, less wheat, less beef, less dairy, less everything being exported by Canada. So that's bad for Canada. Too bad. So sad. But it may get worse, huh? By the way, are you guys enjoying today's webinar? If you are, would you please be so kind to let FX Street know? And the way you do that is you click the like button. And remember, I'll be here next month as well, so you might as well go ahead and subscribe to the FX Street channel. Okay, thank you for all of that. Smash that like button. Well, I just think it's rude not to. In fact, I mean, FX Street has given the Forex community so much support and resources and data and information over the last 20 years they've been around that it's really, I mean, if you don't give them positive feedback, I think it'd be a terrible shame. Like, I don't understand why you wouldn't. So you should give them positive feedback. Say thank you by supporting their YouTube channel. All you have to do is click like and click subscribe. It's not asking for much. Okay, so kick down, come clean, don't be a holdout machine. Give them some positive feedback. Click the like button. Thank you. Okay. And once again, if you want to join my daily webinar, I do this every day for about an hour and a half every day, sometimes 2 hours, sometimes 3 hours. But if you want to join mine, simply visit tradersway.com, open a demo account. That's it. That's all you need. Demo account. That's all you need. That's right, Wes. Thank you, FX Street. Ba, 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 ba. All right, so what else do we know? Did we do all the yen pairs or some yen pairs? I forgot what we did already. It's been a long week. Okay, Euro, that's the big question mark. What I did talk about yesterday is the range and trading the range, and that you should expect it to stay in the range forever and ever 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 until it breaks. Don't presume it's going to break. So the trend right now is sideways on this. Down to up to down to up and down again. And quite literally yesterday, we were talking about this like, it's going to go all the way back down. Well, it did. And as far as I'm concerned, it's going to go all the way back up and then all the way back down. So I'm not expecting any trend. I've taught myself over the years never to expect a break, never expect anything except support and resistance to hold. And then when it does break, that would be information to me. If it broke lower, then I'd sell the lower high. If it broke higher, I'd buy the higher low. Okay? And if it moves sideways, get it out of the way. Typically, because I prefer to trade in trend. I don't prefer to trade sideways. So in that case, I would rather sell this. Okay? I would rather sell this. Right? You have to look at it relative to like yesterday, for example. Yesterday we were up here, now we're down here. And I would rather sell this, and I'm already short this. And yesterday we were way up here. So this is what we actually talked about yesterday, that you have to have confidence in your trade plan. And yesterday I don't think we really entered, well, I guess swing trading we did, but yesterday's webinar we were talking more about risk management, like how do I decide when to move these stops? And why not just freak out, take my money and run now? And they're all very good questions. Right? Wes, we already did that. The new swing trading course is over there. Okay? So how do you remain confident and all that kind of stuff? And we talked about, there's uncertainty there. Like I know as much as you do, which is not everything. I don't know what it's going to do. So how do you stay, like, how do you reaffirm and reconfirm your analysis? What's your break point when you do move your stop or you do jump out? What are you looking for to make your decisions? What are your price lines that should confirm or deny the trend, and all these things that go into technical analysis and ultimately being a trader is one of the things we discussed yesterday. And I said, well, I am concerned, but I am holding short for these 3 or 4 reasons, and that I expect this to be down. And if so, I will remain strong. And in fact, if we can get lower than this now, so I'm through sort of the first leg. So let's say Monday is up and Tuesday is down again. Then I'll be quite fine and I can move this stop to here. You see? And if we make the lower low, not only do I manage the trade by moving the stop, I can also use a different setup to predict where we'll be at the end of the week. Okay? And that prediction would be way down here in the neighborhood of 67. And that means, you know, I'm short at 72 and I'm going for 67. And that's how I make these kinds of decisions. Okay. And notice again that you can see my entry. I was front running this last week. Okay. Last week I was front running this. Okay. So my plan for the month was here to here. The thing is I did a front run. Okay, I was in it early because my plans on Thursday, but my trade plans are for Monday. So in this case, I might have traded it on a Thursday, but based on my analysis of Monday, and of course it's Thursday, so Monday hasn't happened yet, so I got to be able to think ahead. So I shot in front of the moving target going, yeah, this is my price, I want to be short 72, and I'm going for 67. Okay, there's my 500 pip plan. So I take it on Thursday, but it had nothing to do with Thursday. Thursday was set on Wednesday or Tuesday or even Monday. Thursday is irrelevant. If you're trading on Thursday, Thursday is ancient history. So on Thursday, I'm like, I'm taking Monday's trade today. That's the difference. Okay? Swing trading, you're much bigger than the now. Okay? The now is volatility. Okay? But volatility is good for scalpers. Okay, but that's not scalping. That's swing trading. So there's a lot more intelligence behind it. Okay? And it fulfills one of the universal truths. Okay? So like one universal truth is, you know, if your average stop had 33 pips, that's your average loss. And when you place trades, you're going for 99. If you're wrong 66% of the time, you lose no money. If you're wrong 66% of the time, you lose no money. So if you can be better than winning 1 out of 3, if you can win 1.5 out of 3, you're profitable. If you can win 2 out of 3, you're very, very profitable. Why? Your losses are small and you let your winners run. Okay? And then what you do is you try to go from 33 to plus 333. Very, very plausible. But yet, to do that, you have to be good at short-term trading, medium-term trading, longer-term trading. You have to be good at fundamentals, because if you believe the trend will drop, let's say 333 pips, and I just showed you multiple trades that are worth 500. So 333 is good, okay? But you still have to enter this first trade like it's like a scalp or a spot trade. There's no difference on entering a trade. Okay? It's trade management, it's trade planning that the difference is, but you still need to know how to short-term trade. You still need to know how to trade on a 5-minute chart or a 15-minute chart. Catch this trade, drop your stop, and then let it work itself out. And if 33 is too close, just change this 5150. What's the big deal? Okay? 150 pips is nothing. So the question is, if you're like, dude, I've never had a 100 pip trade, we need to work on that. Because again, right? Again, a universal truth of trading and investing is letting your winners run. Okay? And ask a question about Aussie yen downward. Will it continue irrespective of the NFP results? I said at the very beginning today, NFP is meaningless. Today's NFP was meaningless. We're not worried about the jobs in the U.S. economy last month. That's not what we're interested in now. Now we're worried about, is the virus hitting America? Are American companies being negatively impacted? If so, how much? We're worried about at the end of, at the next non-farm payrolls, what if it's a negative number? That's what we're worried about now. We're worried about how many basis points will the Fed cut in March and at the end of April, right? And in June. These are the things that we're concerned about now. We already understand we're at full employment. In fact, what we learned today is we're at full employment and we had 273,000 jobs. Oh my God, Fed, raise the interest rate. Oh wait, we can't do that. We're cutting in the interest rate. So that's like what I said is, I was trying to explain before NFP that this NFP doesn't matter anymore. In fact, it tells the Fed to jack up interest rates, and yet we're in a scenario of not only cutting interest rates, but emergency cuts. So the Fed has already said, or it might still be fairly new, okay? Let me make this point. Volatility, because sometimes it's surprising and in all this data, and then they take the trend of all the different types of data and they squish them into a model and it spits out some sort of outlook. Okay? In fact, I can break down an FOMC meeting and tell you exactly step by step what they talk about, but let's just say that they cram it into a model and they can take a good guess at what the economy is like, what it has been like, where it's going, and what it's likely to be like in the near future. But it's not NFP, it's the trend of NFP, and the trend of weekly jobless claims, and the trend in the unemployment rate, and the trend in hourly earnings, right? But the trend in ADP, and the trend in CPI, the trend in PPI, the trend in PCE, the trend in balance of trade, the trend in retail sales, the trend in, it's all of these trends. Not any one of those data points is important in of itself. They all put, right, that you scatter plot each one, and then you throw down in regression lines, and then you start looking at the slopes, y equals mx plus b, and you start fighting over the things that that economists fight over, right? And then we argue, oh, you have a small n, you need a larger data set, and all this whatever, and these economists argue over these things, but each individual dot on the scatter plot is irrelevant. It's the regression, or it's the trend, it's the slope and the regression of them and the deviation from them, and then that's one data set, and then they have to take all these other things and put them together into one giant model. Each one of them irrelevant, but aggregate, they pump out some probability. And what is the probability? The economy is above potential. So they look at potential GDP and then, I don't know, not real GDP, but anyways, they look at the potential of the economy and whether we're above or below the potential. They look at, which is a productivity issue, right? So they look at all the factors of production, all that kind of stuff, capital and labor, entrepreneurialism, and everything else that go into the factors of production. And they pump out from that a potential GDP. And from the potential GDP, they look at the actual output, and then they look at the deviation from the potential and the actual. And then they look at inflation. They look at jobs for sure. And they model all this out. right? And, and all of them kind of intertwine, right? So you'll look at factory capacity and utilization figures to look at how, the efficiency of capital and the quality of labor. Like, you can really get esoteric with this. But at the end of all of this data, right, the economy is either above potential GDP or below potential GDP. Or to say it differently, we're above target inflation or below target inflation. Or we're either adding jobs or we're losing jobs. If we're adding jobs, then we have wages. Wages become someone else's income. More income, it produces more spending, which is someone else's income, right? Or it produces investment, right? Which increases household wealth effect, which increases more spending. And if your house is going up and your retirement's going up, there's all kinds of other things. So that's all good and the opposite is bad. So what is fundamental analysis then? Listen to me, this is important. Fundamental analysis is the Fed's interpretation of all this data, and then they say, you know what? We need to have a policy that's appropriate for these conditions. That, my friend, drives the value of the dollar. Or if you're in some other country, right? If you're in South Africa, what drives the value of the South African rand? Central banking policy. And for everybody else too, ECB, BOE, Bank of Canada, People's Bank of China, whatever, right? Reserve Bank of Australia, all their decisions of what to do in these economic conditions. That is what fundamental analysis is. If you can anticipate what the central bank's policy will be in the near future, we don't even care about now. Once again, we don't care about today, it's the next meeting. Right? People are like, oh my God, Australia cut interest rates and the Australian dollar went up. Why? Because we already knew that. That's why it was weak last month. That's why it's been falling for 2 years. I mean, we already knew that. So what they're guessing is they're not so sure what's going to happen in the next meeting. Therefore, that might create a floor. So we're never interested in the now. We're always like the next meeting. What's going to happen tomorrow? What's going to happen at the next meeting? How will this be interpreted in the near future? The stock market doesn't represent corporation profitability today. It's what the market expects in 6 months. So I keep saying, stop worrying about what's on your 5-minute chart now and don't make decisions on your 5-minute chart. Oh my God, like it's a little bigger than that. That's just volatility. Okay, so the Fed is looking at this data and they must make decisions of what to do. If they decide to lower interest rates, which is another way of saying they're deciding to buy bonds and increase their balance sheet. But if they're buying bonds and they're pushing up the bond market and everyone else is buying bonds to front run the Fed, that lowers interest rates. That makes money available in the economy. Okay, it also makes money cheap, so you get liquidity, you get affordability, right? You get this wonderful market, and if you're a company and you're like, we're worried about the next 6 months because of this coronavirus, maybe we should borrow money and the money is available and it's dirt cheap just to give you a cushion like insurance, then that's available, okay? And there's a consequence to this. Increase in supply of money tends to lower the value. Now, the Fed manages the US dollar. The US dollar is a reserve currency, and that has some uniqueness to it, actually a lot of uniqueness to it. But generally, that when you're analyzing like the Reserve Bank of Australia, if they're lowering interest rates, they're driving bond prices up, they're lowering interest rates, and they're devaluing their currency. And the reason for that is they can make money cheap for the local businesses and local investors. Okay, and maybe from that, maybe Australians could also borrow money from a bank. Doesn't cost them very much. Maybe they can take some equity out of their house and fix up their home or whatever and create economic activity from that. With that understood, as a currency trader, you can translate that into making money. If the Fed is expected to lower interest rates not the Fed, the Reserve Bank of Australia, if the RBA is expected to cut interest rates at the next RBA meeting, which means I think you should be going to the RBA website and looking up when that meeting is. And why don't you read the last 3 press releases and try to see if they've been hinting? They're hinting at what they're going to do next. Because then you can set up the next trade. If the RBA is going to cut at the next RBA meeting, which is not for like 6 weeks, then somewhere between now and 6 weeks, the Australian dollar will weaken. Well, you might open up the Aussie dollar like you did like 3 days ago, and you're like, but Wayne, the Aussie dollar's so strong. Yeah, well, get ready to sell it. Maybe not today, maybe not tomorrow, but maybe by the end of the week, maybe next week. It'll roll over, and you're like, this is just straight up fundamentals, and you go, sell, sell, sell. Not on a higher high, but on a higher low. And you're like, that's it. That's it. That's it. I knew it. Fundamentally, I knew it. There's my technical analysis to confirm it. Fire for effect, making money. Or you can just log in and go, I wonder what happened at the London Open. I think I'll do a breakout. What did everyone else do? Everyone else had a plan at London. I guess I'll wait for all that to happen and then I'll jump in. Dude, that is stupid. I'd rather you have control over your destiny than to buy into some smoke and mirror, dog and pony show carnival trick. Oh, was I too honest there? Anthony Lou says, hey, Trump just signed $8.3 billion bill. Good. What was the World Bank's stimulus? What was the World Bank's, well, let me just say it since I can't even spit out the question. The World Bank put in $50 billion. $50 billion. United States put in 8. You're like, really? That's it? But anyways, holy smokes. Anyways, I got to get off the soapbox, right? You guys are like, is he yelling at me? I don't like being yelled at. So anyways, I'll throttle back. Whoa, 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 whoa. Okay. Ali says, hey, Wayne, are they going negative? You mean the Fed, right? No, the Fed's not going negative. TBM, honesty is priceless. Yeah, well, I'm working on not being nicer. I'm looking at being better at hope, I guess. I don't know what it is. I'm trying to be a better person. So anyways, I don't mean to yell at anybody. I'm not yelling, but I am trying to make a point. Okay. So I used to say, like, for example, of how I'm trying to work on my attitude. I used to say, people is stupid. I used to say this. I used to say it a lot. And I apologize. That's not it's funny, but it's also negative. And it doesn't do me or the world very much good to be so negative. Now, I wasn't born this way. Humanity made this way. But I'm a good, happy, optimistic person inside. I'm an entrepreneur. You can't be you can't be an entrepreneur and not be optimistic. So I have changed my mental t-shirt now. And I say it this way now. People is smart. It's just as funny. That's what I realized. That was my big epiphany. It's just as funny. Okay? It's just as funny. But it's not so negative either. So that's my new t-shirt. Okay. People is smart. More tactful, maybe. You know, I got some honest feedback and criticism from people. Thank you, YouTube. You know, if you put your life on YouTube, people will give you feedback. And, you know, I took it to heart. And I spent a lot of time thinking about it, a lot of time reflecting. And I do want to be a better person every day. So I am doing my best. All right. So there's the yens. We've been selling the heck out of the yens. So I don't know if you want to talk more about them. We could take a look at some of the exotics. And I'm about to lose that trade I've been in for so long. It's a little disappointing. In fact, it's very disappointing. But my goal for this trade here on the Euro Turkish Lira was to stay short one entire year. And it's been 10 months, and there's my stop. I don't think I'm going to make it 2 more months. I hope I do. But my goal was simply to show you that you can stay in. You can do analysis. So I sold here, guys. Okay, back in May. Back in May. Okay, I sold here. And it stayed short, stayed short, stayed short. Now, the goal wasn't to show you risk management and all that kind of stuff. I understand at some point we bottomed out and there was lots of evidence for it. That's not the point. The point is I wanted to show you this trade that I took. And by the way, we all put this together in my live webinars, the free live webinars. Again, if you want to join, just open up a demo account at tradersway.com. In the back office, there's a button to my daily webinar. So in one of the daily webinars, the group and I put together a trade plan. I took it. Cool. But my behind the scenes goal was I'd like to hold this for a year at least. And so here we are 10 months later, and I'm on the precipice of getting knocked out. So if I get knocked out with 0 pips, if I make 0 pips, if I get knocked out next week, did I make any money? If I make no pips, 0, was it a good trade? Baby, do you know I was not being sarcastic? Well, let's take a look. I have $100 invested. I've already collected $923 in the bank. If I get knocked out today, this pops up and knocks me out and I have 0 pips. This profit here, this 128, goes to 0. Then I only made 925% on this trade. Can I count that as a good trade? Yeah, so don't cry me a river. But if this can please just roll over, then I will be in this trade for years, making 1,100% per year, plus pips. Now, for this to roll over, I need the dollar to weaken, but I also need risk on. Even more important than anything, I need risk on. And unfortunately, this move here is the virus. If there was no virus, we'd be somewhere around here. I'd be up 2,000 pips plus $1,000 in swap. But that's what happens. But if I can just survive, maybe survive, maybe I can get some lira strength. Now, right now, there's a slight hope The slight hope comes from the Fed cutting. So Fed cuts. USD falls. Lira debt in dollar terms gets cheaper, and Turkey benefits. Because that spurs economic activity. Essentially, put it this way, imagine you have a variable mortgage, and every month, without fail, you have to pay $3,000. Okay? But this month, interest rates just tanked. Okay? And suddenly, this month, your mortgage is $2,750. Not because your house changed in value, but simply because your variable interest rate fell significantly. What are you going to do with the other $250 in your pocket this month? Beer, cigarettes, and nudie magazines, right? Oh, and diapers. And lottery tickets. And that gets pumped back into the economy. Okay? Ooh, this is kicking off the 21. This is beautiful. Come on. One more little lower low, and I'm going to start locking in some more profits. I'll lock in that 1,000 pips. Mama, 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 mama. In fact, I'm going to move it now, I think. Okay, that's 450. I just like this lower low on this small time frame. This webinar is lagging my my platform. Okay, so that's 450. That's 480. And that's 500 pips. There we go. So I have 950 pips, worst case scenario. A Forex, I love this trading, huh? We celebrate, yeah! Well, now we dance the babushka, right? Nice. Good job. Well, you have to align the technicals and fundamentals, right? So TBM, if you believe we're in a bearish move, but at a take profit zone, most people will likely take profit, and there'll be some fade, which you'll need to trade on Monday. Okay? So you got to fold in next week's swing trade with this month's swing trade. And if the monthly supersedes the weekly, you definitely need to be very careful. Okay? That's why you see me doing things, TBM, like locking in profit. Okay? Think of it like, when does PSAR lock in profit? Are you guys familiar with parabolic stop and reverse? When does PSAR lock in profit? Yes, Brooke, that's why you see what's happened over the last several days. Dollar is weakened. Carry is over. When does PSAR lock in profit? High volatility or low volatility? Never use PSAR? Come on. PSAR is training wheels for risk management. If you suck at risk management, you need to use PSAR. Like kids that don't know how to ride a two-wheeler, put on training wheels to help them balance. That's what PSAR is for those that don't know how to manage their trades. There is a massive lag for sure. PSAR locks in profit when the market is losing volatility. Another way of looking at it is consolidation. Okay? When the trend is slowing down, PSAR freaks out and says, what? It was, right? If the market was falling like a ton of bricks, awesome. But then what if it stops falling like a ton of bricks? Uh-oh, market conditions are changing. Lock in as much profit as you can. And that's kind of what I'm doing here manually. Okay? But I'm also leaving enough room to let the thing fall. You can see my stops are like 130 pips away from price. Okay? Yeah, look up PSAR. Let me show you. Let me show you. Excuse me. I will add, let's do it over here. Insert indicators. Where did the trend maybe? Yeah, parabolic stop and reverse. Yeah, we'll just do it this way. Okay. Trying to find a decent melody, a song that I can sing, my own company. All right, now, somebody trying to sell you some stupid thing. Okay? Someone trying to sell you a stupid course, they'll tell you when PSAR, if PSAR is below, you buy. If PSAR is above, you sell. That's nonsense, by the way. PSAR doesn't tell you anything about entering a trade. It's just wrong. Okay? So your last guru was taught by someone that doesn't know how to trade. And now your guru is teaching you that bad stuff. So anyways, let me tell you what PSAR does tell you. Once you've decided to enter your trade, it tells you where your stop should be. So for example, I have a fundamental bias that says sell Kiwi dollar, or sorry, Kiwi Swiss franc. I've been doing this since December, guys. I've been doing this since December. I made the decision to sell this pair. That's called strategy. From that, I use technical analysis to confirm or deny market conditions and prices in which I should consider selling. For example, I only sell high at resistance. Cool. Lower highs. Nice. That's what technical analysis does. It doesn't put you into a trade, but it'll help you analyze market conditions and help you find your prices. So so today is Friday. So yesterday we were here. And when the swing trading group and I met, we were here. And I said in that meeting, what I was looking for is I would like to sell between 59.80 and 60. I said, there's no way in hell as a bear, that we will breach 160. So I will sell. I will protect. I will defend 160. 0.60, I should say. So my plan, not quite 24 hours ago, 22 hours ago, was we were down here, and yesterday afternoon, 23 hours ago, the plan was let it rise in Asia, sell the hell out of it in London, walk away. Oh, wait, it worked. Of course it worked! Okay? But here's how PSAR comes in. PSAR didn't tell us any of that, by the way. But once you're in the trade, let's say you're in there, it says, hey man, good trade. You're a bear. Awesome. Put your stop here. All right. It's just a guide. But then another giant candle, and it says, hey man, don't move your stop. But we just went from here to here. It just dropped like 100 pips. Yeah, I see that. Don't move your stop is what PSAR says. Okay? And then the next hour, yeah, it made a lower low, but it was hardly anything compared to the last 2.5 hours of trading. So it said, okay, that's cool. It's slowing down. Why don't you move your stop here? Yeah, Jimbo, amazing, right? Okay. Then another smallish candle, but continuing to make a lower low. It said, all right. Move your stop big time again. Move your stop here. Okay? Right? And now what it's doing is saying, don't move your stop. Because we've got some volatility and it looks like it wants to fall again. So in this case, it said, don't move your stop. Because we got the volatility. The volatility. It's like the Walmart. I got the diabetes. But anyways, it looks like she wants to fall. So PSR is like, whoa. Slow down, cowboy. Let this thing play out. Okay? So isn't it interesting? Don't move your stop. Move your stop. Move your stop a lot. Move your stop a lot. Don't move your stop. Whoa. And then if it drops, it'll probably still not have you move your stop. And then once it starts to consolidate at the lower price, it'll say, okay, move your stop. Yeah. Oil's heading to 40. Yeah, but we had that planned out like a week ago, so that's not surprising. You are such a fool to trade like you do. You got to get your planning straight. You got to get your funnies great. Your profits are going nowhere, baby. So anyways, peace out. Yeah. But Raymond, so many people have been taught ridiculous things and have been told ridiculous claims about what PSAR is, what it does, and how you should trade it. Ridiculous, stupid things. Oh, it's fuzzy logic. It works like an AI and It's a volatility tool, dude. Okay? So people, there's too many overstatements about it. But it is great use for risk management if you want to use volatility as a key part of your risk management tactics, okay? Cool. Let's go back, do around the world. We'll do gold, oil, and Bitcoin. Tova, just standard out-of-the-box setting. All right, so like I explained at the early thing, part of our webinar today, for the last couple of weeks, we've been selling this down, and then last Friday, it was time to get out. And then I did a speech on last Friday, again, to Traders Way clients. Please visit tradersway.com, open a demo account, come to my daily webinars. They're free. Okay? And what we talked about is if you sold this and you took profit, you're going to want to sell again because you made so much money here, and whatever you believed here, you still believe there in the upcoming week. So what we need is you're going to get a lower high and then a lower low. So it will go up for several days. You need to find your prices and get ready to sell when you find a reversal pattern. And then I marked all these prices and I'm like, these are all plausible prices. And then, so you got to wait and watch and wonder, when is it going to happen? And then when it does happen, sell. Okay? And the analogy I used, or the speech I did back in here, had to do with this idea that Forex is a zero-sum game. And what that means is, if you make money, it's because someone lost money. Okay? That it's inherently a battle. You either win or you die, right? You live or you lose. It's black or white. Okay? It's you versus somebody else. It's a fight to the death. It's not entirely true. What I was explaining last week is that it's more like a dance. That you can have partners in investing and trading. And there's, on one side you have bulls, right? And on the other side you have bears, and it's a dance. You can work together, and if you do your job right, you will both make money. If you're caught in a small time frame, you're in between these two things. You're in the way, and you're battling, like, as they step forward and back and forward and back. You're just kind of bumping into them and kind of mucking it up, and you're getting your feet stepped on and all this kind of stuff. And what you don't understand is that there's something bigger going on. There's a beautiful dance going on. And the bulls and bears are actually working together in a symbiotic fashion. It's not necessarily zero sum. Okay? So in this case, what we talked about last week was we had this giant bearish run on the market. And now bears need bulls to buy. Now, the flip side of that is bulls know, and you should know this too, for multiple reasons, this is a buy. That is exactly, precisely a bullish entry. That price is extremely predictable. Okay? Extremely predictable that a bull would buy there. It's a little dangerous, but we know they're going to do that, and partially because bulls know that bears are supposed to take profit here. It's all pre-designed if you know how to trade. If you don't know how to trade, all this looks like gobbledygook or magic. But even the bulls knew bears were going to get out here, and even bears knew the bulls were going to jump in. It's taking their turn. The lead moves a foot this way, their left foot, so the other person's right foot or whatever needs to move back. Is it the same? I don't know. But the man leads the foot forward, the woman has to move her foot back. Otherwise, they step on each other. It's a dance, a coordination, symbiotic. No one likes their foot stepped on. Unless you're beautiful, and it's totally okay. All right, so then, what's the next part of the dance? This. But check this out. You had to wait a whole 2.5 days. Sure, it fell for 10 days straight, but you had to take a break for 2.5, wait for it to set up, and fall. Now, what did the bears need before they could sell again? They needed bulls to buy. They were hoping bulls would buy. They were praying for bulls to buy. And bulls bought it. And they made money for 2.5 days. And then bears are like, oh, thank goodness. You drove it all the way up to, 49. The weekly M3, the monthly central pivot. Oh, thank heaven. Thank you, bulls. We so appreciate what you did. Now it's our market. Get the heck out. And then they sold it off again. Bulls needed bears to take profit, and they did. And then bears needed bulls to drive prices up to create the lower high. And then the bulls had their time. They made their money. They did their job. And bears thanked them. And then it was the bears' turn to drive it back down and make a lower low. So actually, last Thursday, last Friday, we talked about this. Very factual. That this is an out. Bears need bulls to drive it up to this price. And then once we get to this 49 level, based on our analysis, this will drop to 40 bucks a barrel. $10 base, $9. Okay? So if you're not planning like this, guys, like if you didn't have this all planned out, so we're talking about you had to wait 3 days before you could sell, and then you'd be short for the next week. If you're not planning 2-3 days ahead and letting your winners run 3, 4, 5, 6, 7 days, 3 or 4 or 5 weeks, 2 or 3 or 4 months, then you're not trading as well as you could be. You're stuck in your tactical world, your mechanical tactical world, which is necessary to know how to trade, but you're missing the big money. And the scary part of this is one day you'll wake up and you'll say, well, I've been trading the 15-minute chart for the last 5 hours, and I've been making less than minimum wage. And then you'll say, well, to make big money, to drive the yellow Lamborghini and to get the good-looking girls to smile at me, I'm going to need to jack up my lot size. And you just threw away your career. And by the way, I don't mean you threw away a few $1,000 or whatever you have in your account. I mean you threw away a very, very, very happy, lucrative career and business that you could be doing the next 20 or 30 years of your life and changing the destiny of your lineage. And you threw it away because you jacked up your lot size on a 15-minute chart because you were trying to make an extra $100 a day. And you just blew it. You pissed it away on risk because you don't know how to trade. You got to get bigger than that. And I don't mean big lot size. I mean big knowledge. Right? I want you to be big knowledge. I want you to understand why oil is moving where it is. And when you see it, how do you set it up and take it? And go back to this idea of the universal truth. You know you must let your winners run. So you might place a trade on your 15-minute chart, but you need to set it up on a 4-hour chart and make your trades bigger. Not the lot size, but the number of pips. If you've never had a 100 pip trade, you're not doing it right. You should have 100 pip trades daily. Not every day, but you should be setting them up. You should be looking for them, and they're there all the time if you just let them run. So your money is like employees. They will work for you day and night, night and day, making you pips, versus you staring at your charts for 4 or 5 hours, placing a couple of trades, staring at them until your eyes dry out, and then cashing out with your 27 pips. Be bigger than 27 pips. Don't worry about lot size. Don't worry about lot size. It's not the secret to wealth. Longevity. Longevity is the secret to wealth. Okay? Not every day, but you should be planning for them every day. You should be looking for them every day because of your plan. And if they set up from the plan you did yesterday or the day before, and you get your price, you get your pattern, you got all of that, and you said, if I take this, I'm risking 33 pips, but because of the analysis I did yesterday or the day before, I know this is worth hundreds. So I will risk 33. I will trade it on my 15-minute chart because 33 pips should be enough on a 15-minute chart. And then I'm going to let this winner run because my value is not the trading. Pulling the trigger is not your value. Your value is your planning. That you can find a trade that's worth 300 pips or 500 pips. The planning. And then the execution is just now you knowing when the... See, these trades tend to set up at the same time all the time. So you show up, you know when to be around because you're experienced, you know how the market works. Maybe you're taking my training courses at a FX Bootcamp or something, but you know when to expect. Anyway, so you come in and you're like, oh, here it is. Here's the cross at resistance I've been looking for the last 2 or 3 days. Oh, here I am. We're right in my sell zone that I expected 2 or 3 days ago. So now I need some sort of pattern. And you're like, oh, how about a triple top, lower low, lower high? You sell there and now you're done. You're not done for the hour. You're not going to let oil fall for an hour and take 20 cents off of it. You're not going to let it fall for the day and take $1 out of it. You're not going to let it fall for the rest of the week and take $4 out of it. You're like, this is a $9 trade every day of the week. And you're going to let this run. It'll work for you today. It'll work for you tomorrow. It'll work for you the next day. It'll keep working for you until it turns around and bites you. So you need to manage your risk. Think of it this way. You make a lot of money because you go to the market every day with your weaved basket and you sit there and you play a flute and a cobra comes out. People throw money at your feet. This is your job. And you know you've been doing this a long time. You can expect a certain amount of money every day. Some days are a little tight. Some days are very generous. But you get enough to eat. This is your job and all that kind of stuff. Don't forget the snake can bite you. Right? Have a plan for that risk. So your good job here is to set up your trades. Okay? And you know every day you're risk off. Until proven otherwise, you have decided through your fundamental analysis of the global economy and the opportunities and risks thereof, you said, right now, under these market conditions, I am risk off. So I know things to do things like sell oil. I know to buy gold. I know to buy yen. I know to buy Swiss franc. I know to sell Aussie. You see what I mean? And like you got so many ridiculous trades that you could potentially set up because you've already made an informed business decision. The rest is technical analysis. Dude, this is a lower low. What's it going to do in the future? It's going to make a lower high, so you're going to sell that, dude. Like the technicals are straightforward, man, but they don't tell you what to do. That's the giant fallacy that most people think. Like, oh, well, everything's in price. I don't have to do fundamental. Oh, gee whiz. How can you even call yourself a professional if you don't understand fundamental analysis or macroeconomics? Oh, everything's in the price. Dude, you're throwing away 50% of the entire industry knowledge. You can't call yourself a professional with that kind of attitude. There's just no way. You'd be laughed off stage. Laughed off stage. Oh, you don't need to understand fundamentals. Wowzer. Wowzer. Giant red flag, right? So you need a combination. Luckily, these things are not as complicated as they need to be. I happen to have a macroeconomics degree from Harvard with honors, so I can explain these things in fairly simple terms, because most of the time they are fairly simple. You just need the education, that's all. So here we go. Gold. Can we call this resistance? Yeah, so you should be cautious. Now, on top of this, we have some technical analysis. This is price action. Let's throw in, our algos, if you will. The algos say this, that it's going to go up to about 1,700 and then take a break. So I advise you to be careful around 1,700. Okay? The high end is 1,750. Okay. Probably won't happen this week is what I'm thinking. What I'm thinking is most likely is up and then down, and then next week up to 1,750 and then down. So you mark those as levels of caution. Okay? So down, up, and then maybe down. Okay? Cool. Bitcoin. Bitcoin. You guys want to do Bitcoin? BTC, Baba? BTC. Let's take a look at Bitcoin. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, down, 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 down. Ooh. Up, up, sell. Down, 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 down. Up, up, sell. Down, 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 down. Up, up, sell. Down, 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 down. Ooh, ooh. Up, up. What? But here's the thing. I think this bigger trend is this way. So if you're still a bear on this move, you have to pick your prices. This week's price is this. It's a combination of the monthly central pivot point and next week's M3. Not this week's M3. Next week's M3. So on Monday, I need to be short 9133. But I knew this yesterday. Yesterday. My profit seems so far away. All right. So that's my plan for next week if I'm a bear. Now, what if I'm a bull, you say? Oh, you want to be a bull in Bitcoin? I got you, dog. Here's how you do it, brother. Roll reversal. There's plan A. There's plan B. So if you are a bull, let's do this in green. Your bull is, it's going to drift down, and then it's going to drift down the rest of the day. And by Monday, you'll be up like this. Or plan B, you're looking for a double bottom. And that is going to be pretty scary for you because if it drops here, it potentially can drop quite a bit actually. So you really need the plan A to work. So you're like, you might skip plan B and say, well, I don't really want to go there. So it's one of these things that's going to work out. Now, which one is which? I don't know. How the heck would I know? But if I had an opinion, like how many times have I heard Bitcoin's going to go to 100,000 because of something? Oh my God. All the clickbait on the internet is ridiculous. Bitcoin's going to 100,000. Great, 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 great. But at least they have opinion. So if that were true, if that's what I believed, then I know how to set this up. Bro. I know how to set this up. I got it. This is the monthly buy. You should know this, by the way. Let's clear this out. Let's start this over again. You should know this is, that was supposed to be a B. Can you believe it? Let me do this in pink. You should already know this is a buy zone. Okay? If you don't know this, you're missing there's a giant gap in your trading knowledge. Huge if you don't know that. Okay? So if you do know it, here's what you already have in your mind. As a bull, this has been going up and up and up. Remember, it was at 3,000. This is it going to 10,000. So you know this is a giant up, and this is just a little hesitation on some profit taking, and a resumption of a trend is likely to happen, and you knew it. You knew here here and here that we were simply falling to this zone. Okay, now you got it. And now game on, you are certain. You will fire for effect. You're not logging in and like, I wonder what's going to happen today. You know this because you've done the work. You have the plan. You've done the analysis. Now you're waiting, setting up ambushes, and you're going to destroy this market. You're going to destroy every bear on that move because you're so ready, willing, and able. So under those circumstances, you must buy this dip here or you don't know what you're doing. Just, you're a bull, but you're walking around and it goes up and you're not on it, so you buy it late, or it goes up and you don't buy it and you're like, well, I knew it. I wasn't ready or I wasn't there. Dude, you're just not planning. So you got to take your planning to the next level. Do you remember I said at the very beginning of this webinar, my goal is to teach you how to plan technically, fundamentally, so you can be ready psychologically? I hope I'm achieving my goal today. I hope I'm destroying some misnomers right, that you might have had about trading. That trading's exciting and you sit around and boo, 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 like you're playing Fortnite getting rich. No, actually, that's not how it happens. That's not actually how it happens. Okay? And the other thing I'm 100% convinced of, if you do the work, you can master trading. I'm convinced of it. Okay? I'd say turtle traders, except turtle traders didn't know anything about risk management, and their trading style was reckless and even foolish. Okay? So you can learn risk management. I just showed you like, hey, why don't you just use PSAR? Okay, done. Turtle traders would have been a lot better. Okay? So it's not fundamental analysis only. That's ridiculous. It's not technical analysis only. That is also ridiculous. It's having a combination of these two. One sets strategy, fundamental sets strategy. Technical analysis are your tactical entries, exits, and risk management. And if you put these things together and add blood, sweat, and tears for years, you will do fine. If you want to get rich quick, it ain't going to happen, brother. Getting rich quick is a path to poverty. I know a lot of extremely wealthy people. None of them got it through being lazy, looking for the cheap way, looking for ways to cut corners, looking for the easy out. It's never happened. I've never seen it. I've never seen it. I've never seen someone trying to get rich quick get rich. Never seen it. Never seen it. So you must commit to the long term. You like letting your winners run, you need to let your career run. It's about being in the game for decades and slowly growing your stack. Okay? And you will achieve way more than what you're thinking now. You will achieve all your goals that you have now, and then you'll get to a point where you'll be sitting maybe in the warm sun or something, and you're having a moment to yourself, and you will think, now what? Now what? You've achieved everything, and you're still young. Like, what do I do now? I got my Panerai. Now I still don't feel like a big shot. I got my Lambo. Girls still don't like me. I got the nicer neighborhood. I got the great apartment with the awesome view. Yeah, it's cool. Now what? And I'll tell you what. The secret to long-term sustainable happiness, deep down core happiness, is sharing and contributing to other people's success. First, you have to be content. Content leads to your interpersonal happiness. Just setting the stage so you can be happy. Content comes from a level of gratefulness. Okay? You must be grateful. So one day you'll look back and say, oh my God, I am a Forex trader. I don't have a loser boss. I don't have to commute to work. I have freedom to do this from a Starbucks or from a cruise or right in another country. And I can take care of myself. I can take care of my family. I have not just abundance, but I have so much freedom. I am so grateful that I've turned this opportunity into a reality. And I enjoy doing it versus digging ditches for an idiot or whatever it was, because we all dig ditches for idiots. If you have a job and you get paid for your time, right? I don't care if you make $400,000 a year. If you get paid for your time, you're poor. So if suddenly you're independent and you're free of all of this stuff and your Forex is providing, you should be so grateful. And that you will suddenly be proud and strong and content inside. And then the next step beyond that is sharing that with others. Making them great. Making them grateful for the opportunities they have, or the opportunities they took, or how they empowered their lives, or empowered the lives of people around them, made a positive contribution to everything and everyone important to them. And you will find true true inner long-term lasting happiness. I've been doing these webinars for 20 years. It's a source of my long-term happiness, sustainable happiness. People come up to me all over the world and they tell me, Wayne, you made a difference in my life. Thank you, right? I want you to understand all of this and get away from the get rich part. You understand? It's not a get rich part. It's changed the universe. It's blood, sweat, and tears, sacrifice, pain, right? And then getting through that, working through that, growing intellectually, emotionally, maybe even physically growing. Okay? And then being able to sustain something that you love and enjoy. Oh, and by the way, it will compensate you more than enough. Don't worry about that. If you can do this for 10, 15, 20 years, you're going to be fine. Don't worry about all that other stuff. Okay? If you don't have the other stuff and you make a lot of money because you did gamble it and you did jack up your lot size and you got lucky on a bunch of things, you made a bunch of money, you're going to blow it out. It doesn't matter. Or you'll do it for a while and then you won't be able to sleep at night and you'll self-sabotage. And it'll just be over anyways. Okay? But I want you to think bigger. I want you to think about what kind of trader you want to be in 10 or 20 years. I literally want you to think about it. When you think about it, what kind of trader do you want to be in 10 years? You should be able to create a vision, like you're working at home, you got this awesome office, you're trading money for some friends and families and fools, but whatever, you got a big stack now, and you're trading, and you're patient, and you're disciplined, and you got the CNBC and Bloomberg and FX Street up there, and you got everything going on, and you're doing your trading, and this is happy, and you're doing this, and you're doing that, and you're just loving life and living large, but you're not gambling and risking and all this. You're doing something, and you can almost count on a result. 60% of the time, you're correct every time. And it's just working out for you. But I want you to think about it. And you're big. You notice like in webinars, I tend to be big and all that kind of stuff. This is important. You know, in studies, and I learned this at Harvard, if you act and think big, okay? If you act and think big. If you start to, first of all, you think about the trader you want to be in 10 years. And then you think about it, what kind of control you have, and what kind of opportunity, what kind of confidence, and you think about it. And if you even act it out, you raise your arms like this, or you stand up, or whatever, and you think about how strong and confident and happy you are. This is what Harvard taught me. Through scientific methodology, chemistry. How long does it take for your testosterone level to go up, and this is even for women, testosterone levels to go up and cortisone levels to go down? Testosterone is the confidence that you need, right? To be able to take the risk. And your cortisone is the sort of the fear and the garbage that talks you out of good trades, okay? Under scientific methodology with true chemistry, when people did this and they licked a cotton swab and it was tested. Do you know how long it takes for your actual brain chemistry to actually change? Like, I don't mean like you emotionally change, because you do, but like chemically change. Your testosterone goes up, your cortisone goes down. You get more good, you have less bad. Do you know it's 22 seconds? If just once a day before you started trading, you visualize the trader, the person you want to be in 10 years, I will be a confident, long-term focused, patient, disciplined, profitable trader who has long-term sustained happiness. And by the time you say it, your body chemistry has actually changed. You are actually chemically different than you were 22 seconds earlier. Imagine if you did this every day. Imagine if you had a picture of yourself that you could see and connect to emotionally every time before you start trading. Now, maybe it's a picture. Maybe it's my daily webinar. Maybe you're logging in and it's Wayne's voice and it's Wayne's energy and I'm pushing this karma to you. And that's enough. And you're like, I'm on my path to greatness. And now all you have to do is follow your path every day, not be a degenerate gambler, get rich quick fool. But you have to choose. You'll have to choose. And we're done to the minute. Look at that. To the minute, we're done. So, thank you for being in my life. Thank you to FX Street for hosting us for the 167th month. Thank you to Traders Way for supporting us and what I do and all this kind of stuff. Please visit tradersway.com. If you open up a demo account, you can come to my webinar on Monday, my webinar on Tuesday, my webinar on Wednesday, my webinar on Thursday, my webinar on Friday. And then Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, every day. We can be together on our same team, similar path. Okay? Thank you, FX Street. Thank you to you. Thank you, Traders Way. Thank you, everybody. Hope you had a wonderful webinar. Have a fantastic weekend. And I mean this too. Peace on earth. May the pips be with you. May your profits be above average. And thank you for being in my life. You keep me sharp. You keep me focused. You give me energy. I simply try to give back that positiveness so that we can share.